Hey everybody, this is Jim at SP500chart.com. It is 4:20 on October 24th, 2013. That's Thursday afternoon. We're going to take a look at the S&P. After I remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional, just a guy that draws lines on charts. Let's take a look. Okay, looking at a 5-minute chart. S&P was up a little bit today, but I have to be perfectly frank. This little action since that gap down on the 23rd is looking suspect. We're not really getting a strong bounce off of anywhere. I had drawn this little gray line right here, which is based upon a parallel to this top line right here. See it? And I just lined it up with these last lows back on the 15th. And you know, that may not be really that important a line. That's why it's a very light gray. But if you look at what has taken place between these little blue lines, we're basically, it looks like we're forming a fairly long-lived or long-lived, which is it? I don't know, but a 2-day or almost 2-day bear flag. It's just what it looks like. Even if we were lined up perfectly with this line right here, and we knew that this was a support line that we can pretty much count on, okay, which we can't because it's being defined really only by one point of contact back on the 15th, and the fact that it happens to be parallel to this line that does have a history, the one I'm highlighting right here. Even if this was a reliable trend line that had 2 or more touches defining it before we got to this point right here for the past 2 days, the fact that we are just gravitating towards that line as opposed to bounding off of it like we have in the past. Again, look here. Look at this right here. We just bounded off of this support line. Then we hugged it. Then we broke it. Now we're hugging it. It does not give me a tremendous amount of confidence in the technical condition of the S&P at this point in time. Interesting to note, I look at some individual stocks and I still see bullish charts. But right now the S&P looks like we're in a bear flag. But the good news is bear flags, and let's just refine this a little bit. The good news is that bear flags tell you when they become bear flags when they're confirmed. We mentioned that this might have been a little inverted head and shoulders here. Well, if it is, it's already made its target. You'll also note that we turned back today right at our gap down level on that took place on the morning of the 23rd, yesterday morning. So what an interesting little picture here that kind of bears out a lot of the things that we talk about. And that is, here's our gap. We come right up to that gap today. That is the high of the day. So what I would do is pretty simple. I would watch this little rising pattern right here. I wouldn't be too concerned about that little gray line because that was an iffy proposition. I would be more concerned about this one because this has held the S&P up for 2 days now, and if this breaks, then I think we probably come down to retest some lows down in the 1740s. I don't think I don't think the wheels are going to come off quite yet if that were to break. I just don't think that's what we would be in store for. I could see an eventual move setting up to test our gap up, or at least a part of our gap up back on the 16th. That would require getting down into the 17 teens. That's quite conceivable. But right now, we're dealing with this little 2-day rising pattern, and I would watch it. If we were to get some surprising jobs news or something, maybe we bounce over this. It's not the way it's looking right now, though. I would watch this line instead, and I would be prepared for the market to take a breather for a few days upon the breaking of this lower line. It's not broken yet, so you can't say it's broken. You can only say this definitely looks suspect. It just looks like a fairly weak, based upon the price movement alone, this is just a weak movement to see after what you think should have been a fairly robust move off of support. Instead, if this is even decent support, whether it is or not, we're just kind of melting up, and this looks to me to be a setup, more than likely, for some downward selling pressure. But we will know that when this lower line breaks. So that's just a few points underneath where we are. Again, we can watch the futures, see what hint we may have coming into the open tomorrow. So there you have it. That is the video for October 24th, 2013. Hey, thanks for watching. Take care.